I'm Keegan Shivers.
And I'm Nick Shivers.
And this is the Shivers Report, where we give you the most up-to-date real estate information
in the world!
And more specifically in the Pacific Northwest. This first quarter, this first almost 4 months of the year have been some of the most volatile time in the real estate market history.
Yes.
I mean, from rates going below 6%, going all the way up to almost 6.7%, there's been this kind of up and down in such a short amount of time that we're not used to in the real estate market.
No, I don't think we're used to it in the economy. How real estate historically is a very sticky product, meaning it doesn't move real quick. And it's still not moving super quick. I mean, but I think 12 out of the top 20 metros have seen price depreciation this year. And that's not even factoring in inflation. That's real price depreciation. And that doesn't happen in real estate very often. And on the other hand, so interest rates went up, they went down, things were picking back up. Now in the last few days, they've went back up again. But mortgage applications from last week's numbers are up 21%. Purchase applications, and that's a lead indicator that the market should improve. Now, just because, remember, all those people that got the mortgage applications, if they don't have a house in contract, those rates aren't locked. And if interest rates go up 0.25%, they might back off the market again. And that's what's causing the volatility, a lot of this chaos.
Yeah, because it feels like we get to a certain point on rates and it starts to get a little bit hot again. And every single time it's felt like over the last year, I mean, this happened last year too. We get under 6.25 and it'll jump back up. Right now, we got under 6%, it jumped back up. We got under 6.3 again. We were just at 6.32, and then it jumped up to, what was it?
6.48.
6.48.
Yeah.
It feels like we're going on this back and forth constantly. Do you think that we're seeing the depreciation from more so that giant leap we took in 2020, 2021 with prices growing substantially? Or do you think it's more so just the uncertainty right now and the back and forth that we're seeing with the rates?
Yeah, that's a great question. And we saw massive, it took 10 years of appreciation and put it into 2 years. From 2020 to 2022, we had 10 years of real estate. Because remember, real estate traditionally is 3 to 5% appreciation. And we saw, 35, 45, 50% growth in those 2 to 3 years. So when you factor in, remember, real estate's hyper-local. We have the Sun Belts that even though you're getting domestic migration in those areas, the supply was so high because all the builders crammed in there, all the Pulte's, the Lennars, the D.R. Hortons. So they had a ton of supply and people coming in, but that has slowed down. So that is why the values down there are going down. West Coast is a whole different ballgame. West Coast, we're seeing people exodus the area. Washington, Oregon, California, domestic migration in all those areas are leaving. But the supply isn't as high. So even though demand's coming down, we're only seeing 3% to 5% depreciation in those markets. So, and housing formations, the average age, I think, of a new buyer is in the 40s now. That's first-time home buyer. So it takes longer for people to get into a home, and people are keeping their homes longer. When I first started real estate back when the dinosaurs were around, every 5 years people would sell. Now it's 10 to 12 years. So people aren't moving as much.
For somebody who might be in their 20s, 30s, that number can be a little bit scary because a lot of people want to buy a house. That's a big step for a good amount of people, not everybody.
Right.
Do you think we're past that? Do you think there's any way that we can get back down? Or do you think we've kind of sailed that ship? It's at this point probably going to stay a little bit higher than 40s, maybe even go up from here.
Well, I think Nobody knows. But
Yeah.
the one thing that I could say, and this is, I do not like government intervening in the process. So I don't like our current administration trying to say, we got to get rates down, 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 down. Well, there is some point in keeping rates in that 6%. But when you get them too low, what happens is you get a spike in prices. If things continue, because it's been really since summer of 2022 when values flattened to depreciated. If we have 4 to 5 more years of flat to small depreciations, then we're back into a normal trend, and then people can start affording homes. So I'm kind of, government, stay out of the process. Let the markets do their job. And, the fact is, not everybody should own a home. And, even though things are challenging for young people, I admit that 100%. Compared to the rest of the world, I mean, people live in small units. We've traveled over in Europe and Eastern Europe. I mean, those places that we were staying in were tiny, but so we're still spoiled in the U.S.
Yeah. And like you said on government intervention, I mean, that's kind of what put us here in the first place is we had government go in, save us from the COVID pitfall. And that's kind of been the external factors that have pushed some of these prices up. And now we're trying to see that again, where it looks like the housing market is just trying to correct itself of what had happened over the last couple of years. And now we're trying to have an external factor come in again. Cut rates. Do you think that it just needs to figure itself out?
I do. That's but unfortunately, I'm not sure if the government will allow that to happen anymore. So you just gotta understand what we're looking at and be ahead of the game so kind of what's happening. But the problem is right now there are things that are unprecedented happening. Inflation's up, stock market's up. I mean, everything, real estate applications are up, but home sales are down. I mean, and it can change quickly.
It's confusing.
It's very confusing.
Because that is so true. You look at the stock market. If you're in stocks, you're like, oh man, this is great.
Yeah.
This is great. But then the sentiment in the news and what you read in the headlines is people are struggling. Inflation is affecting. You see it in the stores. You see it at the gas stations. So if you're not in the markets and you're not in hard assets, you're really feeling it right now.
We have a K-shaped economy, and it's not good. The people that have assets keep getting richer, and the people that don't are struggling to get into the asset game because assets are going up.
Yeah, and do you see what needs to happen to reverse that in a sense? Because it started to become that way, and we felt it. Is there any way that we can kind of reverse back to? I mean, our middle class is very important to the American economy as a whole.
Yes, 100%.
And with AI, I mean, there's fear factors of what jobs are going to be taken by AI. What does that actually look like for people that are in those jobs? And then where do we go from there?
Right. That is above my pay grade. That being said, as a blue-collar economist, I believe that there is a culture of, where people focus so much outside what they can control that they don't do anything.
Yeah.
I think the younger generation that focuses in their own, staying in their wheelhouse, becoming good at something, using AI to help it, and being able to communicate with people. I think those people, because their competition is, they don't have a lot of competition. I think they will succeed. I think a lot of people won't, because when you focus outside yourself, what you can control, and you worry, the rates are up, the rates are down. Yes, you need to understand that. But if that's all you're focusing in, and you're not focusing on getting better, what you can control, what skills can you learn, then you give all your power away. And I don't believe that that's the winning formula.
Yeah. I mean, a great time to set yourself apart from other people, to take steps to take over market share, whatever you're in, or to try something different that not everybody else is doing. This is a great time to do that. And then when we come back around,
Yeah, I think AI allows smaller companies to compete with the big boys on a scalable level. I mean, there's some things that now small businesses can do that only the big businesses used to do. As long as we don't get a bunch of government intervention, like what's happening in Washington right now, where they're driving out businesses. In my opinion, I think it's a great time to be an entrepreneur.
Yeah. Do you think we still got some big things coming up. We got Warsh is going to be put in as the Fed chair. We still have the Middle East conflict going on right now. Do you see this volatility taming out here soon, or do you think this is something that's here to stay until the Middle East conflict is resolved?
Yeah, these are big questions. I don't see at this point in time. Okay, so if I'm looking in my blue collar economy, I'm looking at. So is there, with the current administration, is there an off ramp somewhere where they can say we're out but we won? Okay, is there any possibility of that? The second thing is the current administration might just say, you know what, we're going to lose midterms. That's kind of already in the books. We're going all in. We're going to get rid of this current regime change in Iran, and then you look to the next president election. So there's all kinds of because right now it's the current administration in the U.S. and Iran. They're who's going to blink first? Who can suffer the most? Because right now middle class is suffering at the pumps.
Yep.
Okay, and that's not good for midterms at all.
No.
Anytime a setting president, the economy is the number one thing that people look at historically, and it's not going in the right direction for the middle class.
Yeah.
So, and I think that's why they keep talking about getting rates down so middle class can get into homes. And I'm not necessarily a fan of forcing rates down if it shouldn't happen.
Yeah. Well, we'll see coming up here soon. Thanks for tuning in to the Shivers Report. If you have any questions about real estate in the Pacific Northwest,
we have you covered.